This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil, and what I want to do today is walk you through the 5 things you need to do, I believe, to be successful at trading. So let's go ahead and get into this. So yeah, 5 things that I believe are extremely important to truly having success at this. And when I'm saying success, I'm talking consistency and longevity. So not necessarily having a couple really good trades. Anybody can have a couple of really good trades, but if you want to be consistent, if you want to do this for a long time, let me just go through and start walking you through what I think are the keys here. So first one is a plan. And I will say that if you don't have a plan, you don't have a chance, I think. And so when you say, so here's the minimum criteria for what I say. When I say I'm talking about a plan, my minimum criteria for that is before you put on a trade, you know what your time frames are, you know where your target is, you know where your stop goes, you know how you're going to trail the position if it starts working in your favor. If you're going to take a profit the moment it goes up at a certain level and you're going to stop it out if it goes a certain level, that's fine, as long as that's a part of your plan and it's written in advance in some way, shape, or form. That's totally fine. Now, when I say plan, I personally believe you want a plan in place. And I help guys, when I do the one-on-one, I really kind of give them a set of questions that helps them to sort of define what they're going to do. And if you have that, then you don't get hit by a lot of curveballs. The market can do a lot of crazy things, and it can knock you off your game very quickly. And you can walk in and think you have a plan in place. That's if it's not written and you haven't sort of accounted for all the potential variables out there, you could really end up feeling lost. So you got to have some form of plan. And as I say, at a very bare minimum, it's got to be a plan before each trade. You can't change or alter your style. So if you buy a stock and then you decide, you know what, I really like this longer term, I'm going to pull my stop. I mean, to me, that's just you're winging it. You're not really a trader at that point. So want to make sure you have some form of a plan. That is number one. All right. Number two is the discipline to follow your plan. Okay, so you have a plan out there, and now do you have the discipline and the patience, really, is what I'm looking for right now. The patience to sit back and wait for the setups that are in your plan. Okay, so if you want to trade counter trend and it's not in your plan, then you need to add it to your plan. All right, you can't just say, wow, I see a great trade here and I'm going to take it. Because what you end up doing is, instead of looking for the criteria that you're trying to find and that fits into your plan, and you're going out there and looking for ideas and you're just not finding any that are inside your plan, you decide to go off plan. And this happens a lot, and it happened to me early on. I noticed it all the time. If I couldn't find something that really met my criteria that was in my plan, I'd go off plan. And I think it can kill. You go back and look at your trades and you see the ones that are hurting you and see if they're really a part of your process, or was it just something you decided to wing at the moment, just based on what the market was doing. All right, so the third thing is discipline, and the discipline to have the patience is one thing, but more important than that is if you've had the patience and you wait for your setup. All right, now you have a trade on. All right. Well, number one, you have to put the trade on when it comes. I've always said the hardest thing about day trading is you have to sit around and do nothing, and sit there and just sit on your hands, essentially. And then in an instant, the market shifts and all of a sudden you have a signal. You have to be ready to take that trade. It's really difficult. And the discipline is following that plan, going through, looking for your criteria. And when I say Patience, I'm talking about waiting for stocks that meet your criteria. Discipline is actually following the guidelines that you've given in your plan of how you're going to handle the trade. How are you going to handle that trade? How are you going to, where are you going to place your stop? How are you going to trail a stop? How are you going to take profits? All of that needs to be inside your plan. You have to have the discipline to follow it. And then what you want to do in your next step is track your progress by logging and reviewing how you're doing. All right. And one of the things you're going to see, and if you go back to this prior slide, is knowing what your tendencies are. All right. The only way to do that is to really log and review your trades and know what am I consistently doing? Do I jump the gun when I want to buy a stock? Do I get in early? Do I get in late? Do I hesitate, right? Or do I raise my stop too quickly, get stopped out? Do I take profits too quickly? Right? Or do I pull my stop completely, which is really the cardinal sin of trading. If you have a stop in place and you pull it, then you're destined to blow up your account. And I can tell you that I did that one time when I was in my mid-20s and I was starting out, and I did an options trade in Microsoft, and I put a huge portion of the account in and really put the whole account in it, frankly. And I was actually doing okay at that point, but I started to get a little cocky, thought I was smart, and figured, you know what, it won't hurt me just to pull the stop. And it was actually an options trade where I don't trade this way anymore, but I did put the whole account in there. I was playing for a kill. When you're young, sometimes you try and do some crazy stuff, and it ended up I blew up my account. Now that was actually the best thing that could have ever happened to me, because that was the one and only time I ever blew up my account, and I was young. And fortunately, it wasn't a huge account, but I learned my lesson at that point, and I've never not honored a stop since then. Okay, if you have a stop in place mentally before you put it in, or what I do is just put it in on the system. If you do that, then your odds of success are going to increase, I think, dramatically. So that's just one piece of the puzzle, right? Honoring your stop. But then all these other nuances that can potentially really hurt you, you need to be able to track and put those in on your log sheet. And the other thing you want to do is after every 25 trades, I'd say 25 trades, you figure out if you need to tweak anything. And I'm not talking about scrapping it, which is what I used to do. I used to do trades and then I'm like, yeah, there's too many losses in this approach. I'm just going to scrap it. And the reality was, well, first thing I didn't do when I started out was log the trades. I was just doing it mentally in my head. I'm pretty smart. I mean, I could keep track. I had a pretty good idea of what was going wrong or what I was doing. And good news for you is because I did that, I ended up learning every single thing I could find about technical analysis. And I spent probably 10 years studying so many different approaches, so many different things. And it took me off on a lot of different tangents when it came to trading. But for research and transferring this knowledge over, obviously it was pretty helpful. Now, because I've tried almost everything, right? Then I started to log my trades down. And then I started figuring out what my tendency was, right? One of my major tendencies was that I hate to take losses. No, it's not really taking losses. It's actually taking risk. I don't like taking risk. And so you have to know yourself. And what I would do is I'd have a great trade. It would go in my favor immediately. I can tell you like 90% of the time stocks would go in my favor immediately. And then I would say, yeah, I'm just going to go to a break even. And it would come down, take me out. Even though I didn't have that in my plan, I'd say, you know what, I'm just going to go to break even. What's the worst thing that happens? I'd break even on the trade. But what really would take place is that stock would come back, take me out. I'd get stopped out. Nothing wrong with the stock. It looked fine. And then 3 weeks later, it'd go on and hit my targets and maybe go for a huge win. So you have to be able to track these things to know who you are and where your tendencies are. I know great golfers. My son's a great golfer. He has tendencies in his golf swing that will always be there, no matter how good he gets. He's always going to have certain tendencies that he's going to have. Same thing with trading. You're going to have certain tendencies, and it goes with your personality. For me, I'm just kind of risk averse, so that's just the way I do things. I've made adjustments to my trading and my trade management and my money management so that now that doesn't affect me whatsoever. I can handle it. I can handle trades that are going against me and or pulling back because I know exactly what I'm trying to do, and I understand the winning mentality, which is go through 20 to 25 trades at a time, follow your plan, all the things that I'm talking about today. All right, the last thing I want to mention here is that if you're doing the first four things, right? I think it's four, and you're struggling a little bit, right? You're not making real progress. My suggestion is to get help. Don't do what I did, okay? It took me so much longer than it should have, but I did it all by myself. I went back, studied. I kept on doing this loop where I would go through trades and it didn't work. So I go learn something else about technical analysis, right? And tried something different. And I tried all of these different things, mostly on intraday trades. And then I started applying it to longer terms after I had sort of figured out what worked and what didn't. But the bottom line is that don't waste years like I did. You don't have to. You can find people like me. I'm not saying me, but someone like me who is willing to give their time. And certainly there's a lot of free information out there. You just got to be careful because there's a lot of guys touting really powerful approaches. And I would tell you this: anyone who's saying that they have this approach that's north of 80% win rate, and that you're going to make a huge amount of money in a short period of time, don't walk from those people, run. I mean, skip them, block them, whatever. Don't watch channels like that, all right? There's no shortcut to what we're trying to accomplish here. And that's why, I do the course. I'm trying to put the course out there for $100 a year. I mean, let me tell you, when I started out, I paid a certain gentleman $6,000 to come and visit for a week. He was actually in the United States from Australia, and he had time, so I asked him to come up here, spent a week with me. I learned so much from that, but that was $6,000, $6,000, right? I bought a book that cost $2,500. In fact, I did that twice. $2,500. The book, it wasn't like made of gold or anything. It was a 40-page book, all right? And that was two different times I did that, two different books. And the amount of knowledge I gained from that is, I don't know that I can really put a price on it. All right. Yeah, it costs a lot, but I'm investing. I'm basically investing in my trading, right? I'm investing in my knowledge. And once you do that, once you accept that you can invest a little bit, you think about the return on that investment. So I wasn't thinking about, $2,500 or $5,000 or $6,000 is how much could I make off that $5,000 or $6,000 by improving my trading? Even if I make, an extra $100 a month or something like that over the course of time, to me, it was worth it if you think about that as an investment. So I think that's how you have to think in this business. If you're going to go it alone and think you're going to kind of squeak out as much knowledge as you can off of the free videos that are out there, I mean, it can be done. But you are going to waste years in the process of doing that. So my suggestion is find an approach or a person that you really like, stick with that. I'm not a huge fan of following a bunch of different guys. And my reasoning is again, I like to use a golf analogy. Think about having a golf pro. What if you had 5 different golf pros or 2 different golf pros? And one guy's telling you one thing and one guy's telling another about your swing. You're going to be totally confused. You're going to be, and when it comes to trading, you're going to have lines all over your chart because one guy's using an 18 and another guy's using a 20 or a 30 or whatever. I mean, it's just too confusing. You have to pick someone you feel like you feel like has the same sort of personality you do, and or his teaching approach is similar to what you like, and go with it. All right. So I hope all this helps. Follow these 5 steps, and I think you're going to move to where you need to be a lot quicker. All right. Let me know if you have any questions. Thanks.